One of the things I noticed, and I will keep this very short and sweet because Rainer asked me to, is seeing the companies that preceded me reminds me of just how special 200,000 ounce a year producers are. And credit to all those companies that are developing operations with that kind of production profile. Minera is looking to be a 150,000 ounce a year producer over the next 3 years. It's taking 3 projects to be able to do that. So I sit back and I look at John's Victoria, I look at Joseph talking about Falco, and I wish that we had it all in one project that we could develop. But the bottom line is, and it is a little hard without the slides, with Osisko's support, as the baby of the accelerator model, we have aspirations to be an adult, and our first operation should be in production next year. It's modest. I wish it was 200,000 ounces. It will be 30,000 ounces. The good news is it will cost us about 8 or 9 million Canadian to get it to that stage. Osisko spent a long time finding a group to build up a group of projects in Mexico and South America with a new accelerator model down south. And you're going to throw me if you actually bring up the slides now. There we go. That's our goal. So the first operation, and I will keep this short and sweet, we have 3 projects in total. 2 of them should have permits by year end. The third one, hopefully later next year. And they are low-cost heap leach operations. They're modest operations. They have low capex. And importantly, they're built by my colleague, who's the brains of the operation, and to be honest, he's the beauty as well, so you got stuck with me. He built Castle Gold that was sold to Argonaut in 2010. Heap leach allows you in Mexico to build these things for a very modest capex. Castle Gold got built for 6.4 million US, 25,000 ounce a year operation. They expanded out of cash flow to 50,000 ounces. They expanded again, or were in the process of expanding again to 75,000 ounces when Argonaut bought them out in 2010 for $130 million. So in many ways, with Osisko's support, we're building Castle Gold 2.0. Darren, my CEO, kept the whole team together. His forte is building these things. He doesn't like investment bankers, and fortunately I was one in a past life, so I get to deal with that now, and he gets to deal with building these things. So the first operation is going to be built very much like Castle Gold. 8 or 9 million Canadian will start a 25,000 to 30,000 a year operation, and we'll expand it out of cash flow. We want to build a sustainable business. We do not want to go back, as is the broken junior business of thinking you can go back to the street every time you need more money. So we look at plus or minus 500,000 ounce deposits, which are orphaned by juniors and the like, that have diminishing returns to expand those resources, but are obviously not big enough for companies to advance from an M&A point of view. And we'll expand those resource bases out of cash flow. It's kind of like the Australians. I remember 20 years ago looking at Australian companies that routinely will take a 200,000 ounce deposit, put it into production for 40,000 ounces a year, and expand it out of cash flow. Somehow the Canadian industry seems broken, with a few exceptions like we're seeing tonight. So we have 2 projects that should have permits by year end. And I say that with a fair degree of conviction because when I'm introducing anything to a new audience, I want to put timelines up there which I can be judged by. So by year end, 2 projects should be permitted. We'll start construction of the first one in Q1 of next year. Should be in production by Q3, Q4 of next year. Second project, Fortuna, which is a 5-year, 50,000 ounce a year operation just on a starter pit, 3.5 to 4 gram open pit gold deposit with about a 6-to-1 strip ratio. We put a PEA out a couple of months ago and 93% after-tax IRR. It's a cash machine. But what's really important to us is it's got exploration upside. We want to expand that mine life. And then the third project should come on the year following. So an incremental build out of 3 operations over 3 years that gets us within 50,000 ounces of what John's going to do in one mine. And again, I think that really highlights just how significant singular 200,000 ounce a year producers are. Exploration potential, I wish I was a Nevada company coming out with these grades. I think anyone in the Great Basin would love them. This is where we see the potential working in Mexico. And no one seems to care right now. But 127 meters of 0.8 grams per ton gold, pretty much from surface last week, was a liquidity event. It's the kind of market we're in, but we're in for the long term here. And I believe we're actually on my presentation for tomorrow, so there was meant to be 5 slides, but I won't take you through everything. So really, I want to be judged anytime I talk to anyone on timelines and guidance. So the goal is, next 3 years, a mine a year, 150,000 ounce a year profile. We're fortunate to have Osisko's backing. Osisko Gold Royalties own 16% of us. Between institutions, Osisko and management, it's close to 50% ownership. And we're actually in the business of building a true mining business here. So without further ado, I'll let you enjoy your dinner, and I appreciate the opportunity to talk to you all tonight.